All right. It says we are live.
How's it going, everyone? This is episode number 66 of Stock Unlock Podcast Live. If you're listening to the recording, come hang out with us on YouTube sometime. We do have an exciting announcement that is surprisingly not Stock Unlock related. This handsome guy over here is now a married man to a gorgeous, I was going to say wife, but I'm going to say partner because that word triggers people sometimes nowadays. But I was up there in Canada. I know. I was up there in Canada for your wedding. It was beautiful, and just wanted to say congratulations. And I'm sure everyone in the chat and the people watching too wish you the same.
Wow. Thanks, Jake. Yeah, it was a great wedding. Happy you made it. Definitely was a smaller wedding, so yeah, was happy that you were there and we had a good day.
Smaller by today's standards. I think it was 70 or 80 people.
No, it was I think the final number was 50.
Okay, I'll give that to you on the smaller side. It felt a little bit bigger. Traveled up to Canada twice during that time.
Yeah.
All right.
Yeah, it was like you were on a monthly subscription for Canadian flights. It was funny.
Dude, people crap on WestJet, but I honestly think it's a fine airline.
It's fine. Yeah.
It's fine. Anyways, it's good to see you all live. We are taking live suggestions in the chat today. So if there is a stock that you are looking at or anything that you want to ask Daniel or myself, feel free to drop it in. Daniel, any stocks that you've been looking at recently, or should we take out the screener?
No, I don't think. Well, there's always stocks I'm looking at, but as I've discussed on my YouTube channel recently, the stocks that I'm looking at now are not ones that I am wanting to discuss publicly. So
the one that you discussed publicly was the one that dropped, Vitech or something.
VTech, yeah, that was
what happened there?
That was very unfortunate timing. I'm a great market timer, everyone. You guys should follow me for my day trading and my swing trading because I kill it.
What's the ticker? I'm trying to bring this up on my stock.
It's VIT space B.ST.
Oh, there's a space in it. That's how you know it's foreign.
That's how you know it's international. Yeah, so I was researching that stock for like a month, bought into it, shared it with my Patreon and everything, like made a deep dive, whatever. And then finally announced that I bought it on my channel. And the only reason I announced that I bought it on my YouTube channel publicly was because I made this long video talking about how I thought the US markets were getting overvalued. Everything is expensive. I'm not finding value there. And then everyone was like, well, then why don't you share a stock that you've been buying internationally? Like, you're just teasing us at this point. It's kind of like, what the hell, man?
I mean, you are teasing them, though.
I know, but I think my logic is fair. Anyways.
Also agreed.
Yeah, anyways. So I finally was like, all right, I'm going to give you guys one stock because this one is a mid cap in US dollars. Its market cap, well, now it's around 1.5 billion, not really a small cap. So I was like, this is one that I've been buying. And then overnight, after I post the video, VTech reports its earnings and the stock drops 17% literally the next day. I was like, wow. Yeah, sometimes that just happens.
Yeah, I mean, I'm looking at it historically for those of you who are watching the video, and it does look like if you bought it over 5 years ago, you would be beating the SPY. However, if you bought it any time within the last 5 years, it has been very much so lagging market returns. So I know that you already put out this content on your channel, but I guess it's fair to assume that you feel that this business is now currently undervalued and maybe it wasn't before. Like, I'm not sure actually if we have our historical insights on this. If we do, it might be cool to show. I just don't know if those are
they don't work well. They don't work well for this one yet.
Got it.
Yeah, I mean, I think it's cheap. I think it got cheaper. I think the market is overreacting. Yeah, it's really as simple as that. I mean, if you want me to explain what happened is last year in the second quarter of 2024, they had an abnormally strong quarter for one of their subsidiaries. This company, Jake, if you're reading this, do you know what Constellation Software is?
Yeah, and for the chat, they just buy software businesses, make them more profitable, and it's a like collection of companies.
Serial acquirer of software companies. VTech is the same thing over in Sweden. pretty much copy paste the business model. There's a few differences, but that's what they do. So one of their subsidiaries had a very strong quarter in the second quarter of 2024. They are kind of more like an energy grid software company. There was a lot of energy transactions going on in 2024 for that business. They had an anomaly, very strong quarter. So year over year for the second quarter this year, revenue only grew by 4%. And everyone freaked out. They were like, why is the revenue growing so slowly? What's going on? This company grows its revenue at 20% per year. And if you look at the charts, if you simply go through the earnings report and look at the charts, it's very clear that in the Q2 of 2024, they had a very strong quarter. And
so you're saying for revenue strong or net income strong?
Revenue.
Okay.
You're not going to see it in these charts. You have to go to their subsidiary breakdown in their actual earnings report.
Fair enough.
Yeah. But in my opinion, everything is completely fine. The market is overreacting. People are getting way too caught up on a single quarter. And next quarter, everything is probably going to be back to normal and fine. So.
Okay. Well, we'll wait to see. I heard a rumor that you said on your YouTube channel that the stock was fine, but then it dropped so hard. So I don't know, man.
Yeah, I suck.
If anyone can't tell, I'm very much in a friendly way making fun of Daniel there. Quick yes or no. Are your feelings about the current valuation of Constellation Software public? I think they are. I just want to double check.
I mean, yeah.
Cool. So then my question
in general,
to you, oh, sorry, go ahead.
In general, I don't talk about international or Canadian stocks much on my channel, simply because people, like when I do, the views go down. Like people just don't, the data suggests that people don't want to hear about it. So I don't discuss it. It's as simple as that. But
don't hate the player, hate the game.
That's the game. Yep. So my thoughts on Constellation Software's valuation today is it is extended. Yeah. Its price to free cash flow is at an all-time high of 35. And their growth rates are slowing down. So the price ratio is literally at the highest it's ever been at the same time as the business growth rates are all slowing down. So it looks pretty expensive to me. I'm definitely not a buyer here.
Got you. And I'm going somewhere with these questions, but you do still own Constellation Software. Is that correct?
Yep.
Okay. So my question to you then, and I mean, this is a stock show, so I'm always interested to hear your thoughts here. Maybe some of our viewers are too. Can you walk me through a bit? Because it seems like you're in the middle of a hike. Like there might be an ending to the hike. That hike is, if I know you well, you probably want to own one of Constellation or Vitech. Maybe that isn't true, and you can call me out there. But both of these businesses are very similar. So are you on a journey of potentially picking one or the other? Do you see value in owning both? And if you do, I'd be curious to just understand your mindset a bit more there, as they just are such similar businesses. Anything you'd like to share, or is that more on the private side?
No, I have thought about it, like selling Constellation and putting it in VTech. My thing with Constellation is like, I truly believe that the management of Constellation Software is on par with Warren Buffett. And I'm not exaggerating. I think they are literally that good.
Yeah. And sorry to interrupt you. What was the ticker again for Vitech? I just want to pull it up here.
VIT space B.ST.
Thank you.
Man, you're really derailing me today. But like, what were we just talking about?
You were talking about the valuation of Constellation. So we're talking about how you compare and contrast these two, because you own them both. So what I'm diving into is
really... So the evaluation of Constellation Software, it's just one of those companies where I genuinely think it's one of the highest quality companies I've ever seen. So I'm very, very hesitant to sell it.
Okay. And what's your valuation metric for these?
Price to operating cash flow is the best.
Okay. I know you've already done all this, but okay. Yeah. I mean, you are seeing a very clear valuation change. And in addition to that, the value of Constellation Software is going up. And I'll take the words out of your mouth because I believe it too. The valuation multiple can only expand so much. And if the growth rates of that underlying metric that you are evaluating on aren't also growing or picking up in their growth rates, then this can only go on for so long until the stock becomes, famous quote, take a drink on your bingo card, overvalued. Yep. And it is interesting what you say, because what really impresses me about Constellation, and to be clear, I do not own the company, is I believe the CEO said that the stock is overvalued, like just word for word.
Yeah. Yeah. He basically said that he believes that from Constellation Software's current price the stock will compound by 8 to 10% per year because he believes it is overvalued.
Yeah, I mean, I totally see your case here. So, not to keep pressing you on this, but like, if Constellation's valuation keeps going up, is your mindset that you are eventually like just going to sell it, or that you would like start trimming it,
I'm not a
or
trimmer.
are you just not going to take an action yet?
I think we've discussed this before. I'm not someone who trims. Usually, if I have the decision to sell, I just get out.
Yeah.
So, yeah,
I mean,
I don't know where that point is. Like maybe it's 50 times cash flows or something, but like I think every stock is a sell at a certain price. Like if Constellation got to $1 trillion market cap tomorrow, I'm out of that. I'm making away like a bandit. I'm not staying in that. So there's a price where I would sell, but I don't also think, like I don't try to use foresight on all of my stocks because I think it would be a waste of energy to think about every single stock and where I would sell it if the valuation got too high, if that makes sense.
Yeah, no, it's super fair. And yeah, just to summarize some of the main points here, I mean, less than half the valuation.
Yeah.
It's growing basically at any time frame you look at, almost identically on a revenue basis. I know that there's more to look into there, but yeah, definitely an interesting name. And just to, make fun of you a little bit here, it is hilarious that the stock dropped so much the second you brought it up. They tell you that stocks don't know when you own them, but I actually have to beg to differ here. I think that this stock was aware of the fact that you owned it and you got trolled by the market on the timing. That's just my
Yeah,
take.
I got trolled big time. Like I looked at my comments the next day and everyone was like, wow, down 17% at the time of looking at this video now, because like people obviously would watch it the next day too. I got so many comments like that. I was like, yep.
I heard a rumor that they are creating an inverse Daniel Pronk ETF where you can take the opposite position of every stock you say, and it is up 20% since that video.
Yeah, sure. Like, yeah. BYND, dude. BYND, Oatly, Open Door, all the 2021 meme stocks are coming back.
All right, let's change topic here. What's going on, Yarek? For those of you who are listening, there is a question on the screen. Could you please look into Rocket Lab valuation? Sold it with 200%. I'm assuming that's a gain yesterday. Congrats on the gain. However, it keeps running higher. This is just nuts as people are betting on it. Daniel, I think it would be great for you to screen share and go over this. And while you're doing that, I can actually add some historical context here to keep us honest. If you were to transcript all of the Stock Unlock podcasts, live shows, again, this is number 66, you will find me and Daniel saying very clearly when Rocket Lab was at about $4 that we think that this is an incredibly risky stock. Him and I both didn't invest in it. And we aren't giving advice because we're not financial advisors, but we both made our opinion very clear probably about a year and a half ago that this was an example of a business that is in a new industry, seemed very speculative, and wasn't one that we saw a lot of investability in, very specifically for what Daniel and I care about. I actually do think going back in time, that does remain true. However, let's just be super honest with ourselves. This has over 12x'd. If you followed mine and Daniel's mindset on the stock from what we said a year and a half ago, you would not be very happy with us right now. So before we start talking about this more, this is obviously out of the realm of where Daniel and I usually invest. However, it is obviously a great stock. The last thing I'll say here, Daniel, is I did watch a documentary on an airplane about 3 or 4 months ago on the rocket industry. It had, I think it was called Ava. It was one of the companies that is now underwater. So just to be clear, there are companies that were in this space that you could have invested in that were just like Rocket Lab that have now went to zero. Anyways, Rocket Lab obviously hasn't. I did watch the CEO of Rocket Lab in that video, and the founding story of this and the founder behind this business is a pretty impressive guy. I will say that much. I do really love the founder. But yeah, Daniel, maybe you could take it from here to see what you are seeing in the fundamentals and what may have changed or not have changed since we talked about it a couple of years ago. I don't know about the viewers, but I feel like I'm reading your mind in that sigh.
I'm gonna continue with what I've always said. Like the only thing that's good about the fundamentals of this business is its revenue is growing. Like, okay, revenue is up, but when you take a look at operating income, like it's getting worse. So like the operations are losing more money. Net income is continuing to decline. Shares outstanding is continuing to grow. They're diluting to keep the business going. Operating cash flows have been negative the company's entire history, losing $100 million per year. CapEx, 76 million, stock-based compensation, 63 million, very high for a company losing money. Issuing shares and free cash flows negative, $177 million. So this company is straight up running on other people's money. It's not making any money right now. Investors are very clearly buying it for its future potential. But at the same time, it's now trading at 50 times sales, which is freaking insane. And
Well,
it has a gross
that's
margin.
a bargain compared to PLTR.
And it has a gross margin of only 27%. So the gross margin I view as, oh God, my mic just fell. The gross margin I view as like the company's profit potential long-term. Like if a company has an 80% gross margin, then it's probably pretty likely that one day, if it wanted to, it could produce a free cash flow margin of like at least 20%. But when your gross margin is 27%, you can't have a free cash flow margin of 30%, right? Like it's just the math doesn't work. So maybe this company could have a free cash flow margin of like 10% long term when it actually becomes profitable. So in general, like the profit margins of this business, even when it's matured, are probably not very high. So if you have a 10%, let's be generous, 10% free cash flow margin long term when it's matured on $466 million of revenue, that's $46 million in free cash flow with matured profit margins on a $23 billion market cap divided by $46 million in free cash flow. That's 500 times free cash flow potential when it's matured. Like that is a ridiculous valuation. So I wouldn't necessarily say that, like you said earlier, that this is a good stock. I mean, if you're looking at just the share price, yes, it has been obviously a great stock, but that's just simply not how I invest. I always invest based on fundamentals. And when I look at the fundamentals of this thing, I still think its fundamentals are terrible. And I would say that this is more so a reflection of what I was saying at the beginning of the video, how the US markets are just kind of getting crazy again, in my opinion. And I think that this is a good example that the US markets are in fact getting crazy again. Like this thing should not be selling for 50 times sales, in my opinion.
Fair enough. I don't have too much to add there. The only counterpoint which I feel people might be thinking now is there's always the profile of company where they spend, they're losing, and it's because they're creating IP. So the one thing I will give Rocket Lab is this is not like a payment processing company. This is not a company that's diluting to buy Bitcoin. So while agreeing with the things you said of the amount of risk, with great risk comes great potential reward. For anyone who bought it at $4, if they're still holding, obviously congratulations. Probably out of our scope of competency, which is maybe the most fair thing to say.
I just have different opinions than I think like probably 95% of people in the market. Like I don't think, how do I word this? I don't necessarily think that if you make money on a stock, it was a good investment. And I have had this debate with people before where they think if you make money on a stock, it's always a good investment. And I would actually disagree. And Peter Lynch has actually disagreed with this as well. I actually get this thinking from Peter Lynch. You have to think about the risk you're also taking and being straight up honest with yourself on if you just got lucky. And I think that there are people in the market right now where they're going and buying very speculative stocks with very poor fundamentals. The share prices are rising because the US markets are in a frenzy right now. And then everyone is like, look at me, I'm a really good investor and I'm a genius. And I straight up think that a lot of people are just getting lucky right now and bailed out by the overall froth in the market. And I wouldn't necessarily say that's people being good investors.
Yeah, I mean, it brings up a really great and, of course, opinionated point on what is a good investment. I tend to agree. It makes it a little bit more murky, right? But then you could also say the opposite logic too, right? Hey, I bought this stock or whatever, and I have a 20% loss. It might be harder to make that argument, but then you could also say it wasn't technically a bad investment based on what happened under the hood or what you knew at the time. Yeah, I think this will be one of the things where people will agree to disagree and have their own ways of benchmarking it. But I think it's a very fair point to make, and I expect it to be controversial.
No, it's definitely not white. Like the thing about investing is I would say there's pretty much nothing that's white and black. Like everything is subjective, but that's my opinion. But to your point, where if you bought a stock and it's down 20%, I would actually make the argument that that doesn't mean that it's necessarily a bad investment. I'm currently sitting in that situation with VTech. Like, I am literally in that position right now. And I would not say that VTech is a bad investment. I would say we'll see. But when I look to the business, which is always what I base my investments off of, not what the share price is doing, I would say it's actually probably going to be a phenomenal investment over the long term.
Not investment advice, by the way.
Not investment advice. That's obviously, everyone do your own research. But yeah, so I guess the takeaway there is I don't necessarily think that, at least in the short term, your validity of an investment is confirmed by what the share price of the stock does in the short term.
Fair enough. I have nothing to add there. It actually also looks, so this is the same person that just asked that Rocket Lab comment. If you're just joining us now, you should definitely flash back, start from the beginning. But yeah, this person admits maybe it wasn't a great move, but they made a lot of money. I think there's like a lot of wisdom in that. So Daniel, your words are touching some people there. You have a congrats on the wedding. Most of you have joined after the beginning, but Daniel did get married last week. Congratulations. Sending you hugs and kisses. There was one other question here. So someone's asking about BN. We know that's your favorite topic. While you're thinking about if you want to take that one, Daniel, and again, if anyone's watching, please drop your comments in the chat. We love for this to be interactive. When's the new valuation feature coming out? I can't wait. Also, insight score history. So light background here, unless if you've been sleeping under a rock, we run stockandlock.com. We have our insight score, which is a point-in-time fundamental score, unique to different industries. Everyone loves it. We use it all day, every day. It's been around for 4 years. That is becoming historically back-tested, and we are 10xing all the logic and software around what powers that score. We have been teasing it a little bit, both in this last show and on Daniel's Twitter. We don't have a hard date for this. I feel comfortable saying two things. One, it's coming in the future. We're talking months, not years. Sometime this year. I'm not going to be that rude. And there's one more thing I was going to bring up, but I'm forgetting. Oh, yes. If you are a subscriber with us and you want to beta test and get early access with the responsibility of actually helping us test, we do have a private beta testing crew. Now, I cannot promise, because I haven't talked to Daniel yet, that Valuation historical insights will be on the beta testing list. It might. But even if it's not that, we are starting to beta test the mobile app very, very soon with external testers in that pool. So if you are hearing this and this sounds fun and you want to join the cool cats of the beta testing crew, send an email to us, support@stockandlock.com. Hit us up on our Discord, whatever it may be. Hit us up on email. Let us know. We really appreciate the extra help, and some people have a lot of fun with it.
Yeah, I would double click on what you said there, Jake, about you have to give feedback. So Jake kind of runs the secret beta testing crew, as he calls it. If you're in that group and you do not give feedback, like if you're in there just to get free features, Jake will kick you out.
I've gotten in trouble with this before, though. Like, we love you. Any customer, there's people that are giving us business. Like, obviously, we are really appreciative of that. And like, I have kind of rubbed heads very accidentally with that framing. So yeah, it'll be done respectfully, but just please understand the intent of being in the beta testing crew is to give feedback. If you are not giving feedback or helping us find bugs, or even like just giving us a thumbs up, letting us know that you exist, I'm going to think that you are a competitor trying to steal IP or something else. It's not you, it's me. But yeah. Daniel, do you have any BN discussion in you? I'm not sure if you've read these chats, but it looks like this person is obviously a follower of you and has been doing deep research here. So your call if you want to take this or bounce this over to something else.
No, I can talk about BN. Since BN has gone crazy the past, I think, around the past month. It's been going nuts.
Congrats on all-time highs, and that's the last time I'll interrupt you on this.
Thoughts on BN here. Looking to buy it. It's 20-30% below NAV, trading below peers like BlackRock, etc. So do I build a full position now or wait for a drawdown? Not advice, but what would you do? Yeah, so I definitely cannot tell you what you should do. Not a financial advisor at all. I don't think that looking at Brookfield's net asset value is the way to value this stock personally. The way that I value BN is I look at its distributable earnings, and then I use a price to distributable earnings ratio or metric. And I believe that BN is doing somewhere around $5 billion in distributable earnings per year now. This metric on Stock Unlock, unfortunately, Jake, 6.2 billion does include realized gains on investment sales. So that's not actually like the operating earnings right there. The operating earnings of the company is around 5 billion today. So that puts BN around a 22 price to distributable earnings. I think that's not necessarily expensive for the stock. Its peers like Apollo and KKR trade for above that. I believe they actually trade for 25 to 27. So BN does currently trade for a slight discount to its peers in the US. And they're projecting to grow that DE metric by 20 to 25% annually over the next 5 years. So I think a 22 multiple for 20 to 25% growth is extremely attractive, especially on a high quality company like Brookfield. That's why it's my largest position. And I think that Brookfield personally is still undervalued. I don't think that it is necessarily the like deep value, massively discounted by a ridiculous multiple that it was over the past couple of years. But in terms of is it selling below fair value, I would say, in my opinion, personally, I do think that it is. So I think that that kind of wraps it up. I don't think that it's going to do like crazy returns from here because we've already had a lot of returns from BN. Its multiples have expanded quite a bit. There was a period in 2024 where I think it was trading for like 11 or 12 times distributable earnings, and that multiple has now expanded to 22. So there has been a lot of multiple expansion already. You're muted, Jake.
Probably for the best. I have a nerdy financial data question for you.
What's up?
And I'm also going to secretly, not speaking. Yeah. What do I have a list now? I'm going to secretly announce a new feature. I hate myself. Okay. So right now we get our KPI data from a different data provider than most of the financials on the site. And that is partially due to it being a very unique data set. I do believe that we are about to 10x the amount of KPI data we have in terms of company coverage. So right now we cover around 2,000 to 3,000 stocks. That's about to blow up to about 30,000, including international companies. So you heard that right. If you're one of the few people in here that heard that first, you should feel excited. I got goosebumps too. I know. It's awesome. Daniel, the nerdy financial data question is, does our current data provider for distributable earnings also include that unrealized or realized gains number that you pointed out here, which you said skews a little bit from the actual underlying metric you use when you take out the pen and paper?
Unfortunately, no.
All right. Well, I have a homework assignment for you. You're going to email our data provider and ask them. I'm dead serious right now. And like ask them if they can include that metric. Because Daniel Prong's company Stock Unlock better have the right distributable earnings metric. If not, I think that we can actually just calculate it ourselves for this one data item. And the engineers, including myself, might hate me for that. But if you write that down and give it to us in quarter TTM and yearly, and it takes you like 1 hour or something, we might actually have that in Stock Unlock. So I'll put that in your. You can decide if you want to act on it, actually, but I'll put that in your court. Would love to see that there because it made me very sad when I pulled that up. And you said that it has a technicality in it.
Yeah.
That makes it deviate away from what you like to use.
Yeah, it's like the total distributable earnings is still a great metric, but it is spiky because like in 2021, for example, when the market was extremely frothy, Brookfield was selling a lot of their assets at high prices. So their distributable earnings that year, their total DE was inflated because they were taking a lot of gains on investments. And then over the next few years, they slowed down as the market came down. So their actual total DE declined, but their operating DE was growing the whole time. So realized gains on investments does skew that metric a bit.
Cool. Well, you have your maybe homework assignment. I'd love to make that a reality as we are really digging deep, perfecting our core here. Okay. Shout out to our Goth. Super sorry if I'm mispronouncing that. Also known as BobGo or Robert in the Stock and Lock Discord. Just want to say a huge thank you live on air. This person has been helping us moderate our Discord, honestly, for years at this point. And I know I say this in text, but just want to say it publicly. The amount of appreciation Daniel and I have for that is literally over the roof. The amount of spam that is hidden and triaged by our Goth, or otherwise known as BobGo here, is incredible. So seriously, hats off to you. Really appreciate that. And it's super great to see you live. With that, Daniel, question for you, because this is not in my scope of competency. Have you ever compared Blackstone, Apollo, and BN?
Yeah, and I've also compared KKR. The thing is, they're all kind of different in their own ways. Apollo is very focused on insurance. I believe that's the vast majority of their business is actually being an insurance company. Whereas Brookfield just started their insurance company in 2021, I believe. So they're a little bit different, but overall, they're pretty similar companies, honestly. Here's my thing. Brookfield is a lot of work to analyze the business, understand what's going on there, and keep up to date with everything. And I simply don't want to have another one of these. I'm okay. I like Brookfield, really like the management, trust them entirely. So I'm kind of just like, I have one asset manager. It's the one I really like. And I don't really want to get down the hole of owning Apollo, Blackstone, and KKR, or even a mixture of them, because I think it will be too much work to keep track of. And also, BN was trading for that really large discount in 2023, 2024. Like, as I said, they were trading for about 12 times distributable earnings. And their peers were trading for like 25, 27. So there was a massive discount to BN, which is also why I was more interested in that one.
Yeah, that is starting to happen to me too with some stocks. I am someone who would rather own 5 to 10 businesses as opposed to 20 to 30. And it really comes down to just how much time do you have in the day. Also, there's other things that come into play there where I'm not a huge diversification guy. I do like diversity, actually, but diversification when it comes to stocks, not super into it. Just to make that very clear here. I'm going to actually share my screen, but to finish that thought, Melly, that is a stock that I probably would like and want to buy. But with owning like Microsoft and Google and Amazon, which like are already basically ETFs on their own to analyze, when I started looking at Melly, I was just like, I almost felt anxiety. I was like, I don't even have time to dive into this business. It's so big. I have other things I'm doing, like growing the business and stuff too. Yeah. But anyways, just to bring these stocks up to continue this going here, Daniel, you can direct me as to if there's any other better metrics to use here. I know that these businesses using GAAP financials are pretty challenging, but I figured we could look at like the last 14 years here just to see who's been the winner in market cap gains, which would equate to grow market valuation. And it does seem like, okay, oh, awesome. Yeah, I code this and I didn't even know that you can sort that. Okay. It looks like Apollo has by far had the best CAGR returns in the last 14 years. Let's see if that changes if we make the range smaller.
You do need to be careful when you're using market cap because this can be inflated if the company's share count has grown.
Is there a better metric I can be using here?
Stock price.
Okay, let's see if I don't know if we have stock price here. Okay, we do. It is nuts that our software is so big now, and I've coded a lot of it, that I am actually not able to keep in the top of my head everything we have here. Okay, great call out, Daniel. Let's do this again. We're going to do this one more time. Last 14 years, who's winning? BN. Okay.
There you go.
This is why I love you. And as we move this, you could actually play a little game with your eyes down here if you're watching the CAGR. If you're listening to us just with audio, we are looking at APO, KKR, BX, and BN. It looks like BN over the past 10 plus year period has had the biggest CAGR gains to the stock price. Again, shout out to Daniel for having us move away from market cap there because share count is obviously very relevant. It looks like BN goes back to the bottom once we're within 10 years away. And let's see, it actually kind of stays there until recently. All right, Daniel, I'm not sure if you have any comments on this data. I mean, you could talk about it forever depending on what time range you look at, which could obviously justify something different. So you could pick this time range, say BN was the best, pick this one, say they were the worst. So obviously it's subjective, but
yeah.
Anything else to pull from this, or just that they're all very complicated businesses, and depending on the time that you buy them and the valuation, is obviously going to influence the returns that you can expect to get from the stock?
Yeah, I mean, that's pretty much it.
All right. If anyone has follow-up questions on this, let us know. And yes, if you want to make fun of me for not really realizing parts of our software that existed that I probably wrote, please do so in the chat. And I think we'll probably go for another 5-ish minutes here live if there's more questions. Daniel, I know that you have been hopping online super late. I mean, do you want to talk to anyone here a little bit more about the level of granularity and detail you're going to when it comes to crafting these hyper unique valuation and insight scores? We have already said, just to give a little bit more mathematical nuance here, that the way that the scores work today is being expanded on. So they are already unique per industry, but along with historically backtesting them, we took the opportunity both on the tech layer as well as the product layer to support infinite permutations and deep dives on specific businesses. Since, for example, Google, you might care about advertising revenue, where with BN, you do not. And with BN, you have distributable earnings. And for Spotify, you do not. So obviously, it's not a one score fits all. You've been staying up late, man. I mean, what's going through your brain?
Yeah,
You're like a little like mad scientist there.
No, this actually goes to what Alex Pohl just said, by the way. Hello, Alex. Good to see you again. He says, it seems that alternative asset managers are hard to measure using stock unlock. I would 100% agree with you today. BN score. This is one comment I get every time I talk about Brookfield on my channel is, why is BN score 2.5 on stock unlock? It's because GAAP financials suck for these companies. So we're working on fixing that, and that's actually part of the work that I'm doing right now. So if I share my screen, as Jake said, we are building the historical insight score. This is what it is right here. We're actually taking a look at BN right now, and we're getting down to the point where I was doing this manually, which is why I was staying up so late. I was going through all these stocks. I went through Apollo, KKR, Blackstone, BlackRock, like dozens and dozens of companies to try and figure out what their best metrics are. With BN, it was easy for me because I know this business very well. So we actually have the distributable earnings for BN now over the past 5 years. And we obviously are looking at more metrics here, like specifically for BN. But you can see that now, this isn't live yet, but BN's insight score is actually green right here. And if we click on this date, we can see that its insight score is probably, 4.38. So we are fixing this. We are actually getting all of the right metrics. Like you can see, growth now takes into consideration of fee-bearing capital, fee-related earnings, total assets under management, total distributable earnings. These are the metrics that actually matter for BN. And these metrics only matter for BN. So you will not be, calculating fee-related earnings growth on Google or Microsoft. So we're actually getting down to that level of I don't know that word. We're being that specific on the stocks with our insight score. So it's going to be a lot better of an experience. Like even dividends, we're using distributable earnings payout ratio now for the payout ratio. We're not using like free cash flow or net income. It's their actual distributable earnings payout ratio. So this is a lot better. It's much more intelligent, and it's getting a lot better. Then with the valuation score, this one is very hot online. Like whenever I share the valuation score, we get a lot of interest in what we're building. This is also going to be company specific. So Amazon, for example, the metrics that we use to score Amazon's valuation are completely different than the metrics that we will use to score BNs, for example, or even a stock like Microsoft, Nvidia, or Netflix. Like we're going to be using the metrics that we identify are the best for those companies specifically. So yeah, this is Amazon's historical valuation score now. We can see the valuation got pretty heated in 2020 and in 2021, which does make a lot of sense. Back then, Amazon was actually getting quite freaking expensive. Then as the stock corrected in 2022, the stock went to green. Its valuation score went up as the share price went down, which is exactly what we want to see. And it was green for a while. Now it is still green, but it is approaching orange, which means that it's getting to around fair value now. Like you can see right here in December 2024, when it was at like 226, it was getting to fair value. And I believe we're approaching there again. So yeah, that's kind of what we're doing. This is not ready yet. There's a lot of stocks where this still does not work at all. Like for example, VitB.ST, VTech we have. And the valuation score here. This just like straight up is not accurate. So we do need to do more work. It's not ready yet. That's why it's not released. But yeah, we're working on it. And it is making a lot of really good progress. You're muted again, I think.
I'm excited. You did have a question here. So Gabriel, definitely flash back to earlier in this video. We did get a BN question. Daniel talked at length about it. The TLDRs, he's not a financial advisor, so take this with a grain of salt. Seems to potentially be approaching fair value. It's not as undervalued as Daniel perceives it used to be, but that is just by his own opinion and metric. He did not say that it is overvalued, but classically and annoyingly, do your own research there. But again, he talked at length about that earlier in the video. All right. This has been another great episode, number 66. Didn't call this out, but 66 is the unlucky number. So happy to move past it and getting closer to 69, which is a nice number because we have no maturity here. So, Daniel, I don't know if you want to say anything else before we hit the end stream button here.
No, I don't think so. Just thank you for everyone tuning in. It was fun, as always, and we'll see you next month. Hopefully, we'll have more updates on the app and insights next month.
Yeah. And we can do the fun Apple laser send the show. All right. I'm going to click the end stream button now.
All right. Bye, everyone.
Thanks, everyone.